Hello, how are you doing? Welcome along to FTUK's weekly catch-up live stream. It is the 23rd of March 2025, Friday. It's nice to see you Friday. Hope you've had a good week and you've been successful in your trading wherever you are in the world and whatever you have been trading. It's been a bit on the quiet side, I would have said. It's going to be quiet next week as well. We can definitely feel we're moving into the summer. But there's, that's the seasonality of markets. There's always a few ups and downs. But we've got a lot to do today. Before we get into it, obviously go over to our Discord channel and speak to Reza over there. He will take very, very, very good care of you, as he does with everybody. Very knowledgeable guy as well. Scan the QR code, and yeah, that's the best place to find out everything that's going on at FTUK. And as well, and I always forget to do it, is so please subscribe to the YouTube channel. The posts are going really well. The quizzes and the polls and the images and stuff that we post on the YouTube channel are going very, very well indeed. And keep your eye out, because we have got some fantastic offers that are in those quiz questions as well. So yeah, make sure that you have a good look, and it will pop up on your phone, and join in on that. Right, let's jump in. We've got an awful lot to do today. I've put a lot into today's stream. We're going to talk about three massive big topics. The first one is what you should do on a bank holiday. There's a bank holiday here in the UK on Monday, and they are different. They are very, very different. So I want to just go into that in some detail and how you can maybe recognize some of the hallmarks and not trip up, because I've done plenty of tripping up on bank holidays. Also, as well, I want to talk about PCE inflation, because that is happening next week, next Friday. It's a relatively light week in terms of data on the calendar. We've got GDP data and also got PCE inflation. So I thought we could do a little bit of a discussion on why PCE is so important and why you should care as a trader. Also, as well, I want to do a workshop too on setting realistic goals. There's so many people, they think that they just purchase the account and then they're entitled to, where's my money kind of thing, yeah? That's just the purchase of your prop account should be the end of all of the preparation that you're doing. You should already have a good idea of what you're doing and how you're going to do it. So understanding how to set realistic goals in trading prop accounts, ultra important. So I want to discuss that as well. Okay, right, let's start. Monday, this coming Monday, is a bank holiday here in the UK, spring bank holiday, and bank holidays are very, very strange times to be trading. You approach it from a point of view it being a normal day, and it never turns out to be a normal day, and that's because of the way that the market participants are shifting and changing throughout that session. And although the market might be open, it can be really, really deceptive. Bank holidays are not the same all around the world, so you'll see that we're pretty active here in the UK, and all of a sudden there'll be a bank holiday in the US. Stock markets are not open, so you've got to pay attention to the information that comes out on the brokerages or on any sort of like feeds that you've got going on in your email inbox or whatever. You'll always find out where it is, but pay attention to it, because it really can affect your bottom line, and you can ruin your trading performance by not understanding, oh yeah, it was a bank holiday. So they are always different. Now you'll find that some markets will be open, some will be shut, depending on what it is. So Monday here in the UK is a big bank holiday. It's a spring bank holiday, and it is going to get a lot quieter from today into that bank holiday, and it will pick up again on Tuesday. So yeah, it's something that you need to pay attention to. Now, the key markets that I would say would always be affected, and I would measure this, and this is I want to really emphasize FX markets in this discussion about it. And you'll see it in other markets as well. But because the FX markets are essentially 24/7 and they operate from country to country, when you get a bank holiday in a country and you observe that FX pair operating, you'll feel it. So it's the fastest way, it's the best market for understanding how bank holidays affect markets, in my opinion. So the volatility will change in those FX markets, and I'm going to show you an example of how I would look for that on a chart. The sessions themselves, you'll see that they will lack a lot of momentum, and all of a sudden you'll be trading away, and you'll suddenly realize, or you'll suddenly think, hang on a sec, this is just weird. What happened last week and the way that it was trading, it just seems to have fallen over. Excuse me. So what you'll find is particularly in the days when I was a very, very aggressive scalper, you'd feel it as a scalper, because what is working before just suddenly is just, the market seems to have evaporated, and you're scratching your head why. And what happens then, if you don't understand what you're doing, is you start to go deeper into it, and you'll end up having 3 good weeks, and then you'll lose it all on a bank holiday. And what you really need to do was just step aside. So this is why it's so important to register that the bank holidays are happening. So what's actually going on with bank holidays? Okay, well, certainly from an FX market point of view, what you've got to understand is that they are very, very large markets, global markets, and you have huge commercial banks. They're really the banks that move the FX markets, the commercial banks. They'll be transacting on the behalf of big clients. So great big corporations, Toyota, I don't know, Rolls-Royce, Apple, or whatever, yeah? They have big FX transactions to do. Those commercial banks will put those transactions through. That's what essentially moves our markets intraday to a large degree. And that quality is missing. Why? Because the bank is shut. It's a bank holiday, so they close. So all of those bigger, large-scale transactions, they get reduced. Not completely, but to a large extent. So, and you'll feel that in the volatility, because it just won't be there. That volatility shapes our price action throughout the course of the day. If it's not there, you'll see that the market is behaving differently. It's not that easy to spot on a chart, but I'm going to show you a few clues on how you can start to think about it, really. So you're always going to find exceptions to what's going on in the markets on a bank holiday. But generally, certainly in the UK, you'll feel that London Open, that London session, it's a lot lighter. It just doesn't feel like the markets are moving quite as far, and they're not sticking. The moves are not sticking. Your trends, they don't work. They feel like they're quite hard to establish and then maintain, and you'll get a lot of rotation back in on itself. The market breakouts will not stick. You're more inclined to get false breakouts on any moves, or inside days, in the creation of an inside day, and you'll be looking for an extension away from the previous day's range, which you're just not going to get, and it'll just very slowly rotate back in. That is that quality. You're just missing that weight, or essentially there'll be nothing at all, and you just feel whatever the fundamental lean on a currency is, you'll feel that drift in the market, a market that's just not really going anywhere. It's just drifting like sort of, like I don't know, tumbleweed down a beach. Do you see what I mean? As the wind is blowing. So it just doesn't quite have that sort of like that force behind it as you would normally expect. So let me show you an example. The example I'm gonna use is on the euro against the pound. And the reason is because we've also got a bank holiday here in the UK. And by removing the dollar on this, we can look at a currency pair that is a little bit more, it's quite compressed. It's not like the pound against the yen or the pound against the Australian dollar. It tends to stick. It doesn't move that much, so you can see the qualities in there. Because there's those bank holidays, you'll see that the pound doesn't really, it doesn't react quite as well. So it's a good currency pair to just illustrate some of these core points. And like I said, you'll always find the exceptions, but this is where it sort of like starts and ends. So let me bring up my chart here so I can show you. Now you can see here, this is the daily time frame here. This is the euro against the pound. Each one of these is in a day, is a day, each candle. And I've put the black lines over here, these vertical lines. They're on the recent bank holidays. So we've got the Easter weekend. We had a Good Friday, and we also had the Easter Monday, which is obviously, you can see that the market is grinding to a halt essentially. And then you've got the May Day bank holiday here on the 5th of May. So when I step in onto a 1 hour time frame, you'll see I put boxes around all of this. Now, these are the kinds of things that I want to highlight, because unless you really start to think about the bank holiday itself, it's going to be hard to pull it out the price action. This is where you feel like you're looking through, you're sort of looking for a needle in a haystack sort of thing. But you'll hopefully understand what I mean. First up, these are essentially inside days. So you can see that's the Good Friday there, the blue. And then this blue box here is the bank holiday Monday as well. Okay, well, first up, if you imagine we at that point there, we'd always be working with the leg to the left, yeah? We'd always be working with the price action to the left. So you can see pretty much from the previous Thursday, all of this price action is essentially an inside day, yeah? You've got an inside day here and you've got an inside day here. That means that all of this days, that's the Good Friday, all of the price action in that Friday did not break out of the previous Thursday's range, this day here, that creates that inside day candle. Same again on the Monday as well. And we did get an attempt to get over the high, but it completely failed, yeah? So you can see here, now you imagine that there, what you'd be expecting here is you'd be expecting follow through. You feel like you've got momentum here to the left, you've got a decent retrace, so you're probably going to have a lot of people that are going to be wanting to look for extension back down to these lows down here. What is that? 85.25, and you just didn't get it. You just got this really, really difficult to work with day, which top to toe ended up being around about 25 pips. Yeah, so you can see from going from quite an environment of a reasonable volatility, you've suddenly squashed down to literally nothing. And if you're looking for extension, you're looking for, and you're trading, you're scalping intraday, and you're looking for a move to get on board for the rest of the day, you're not going to get it, because you just essentially just go nowhere, and you're just going to keep chipping away at your account. And I've done that many times. It's not that different on the next day here. Now, one thing that you'll find that is missing as well is like a sense of the main move of the day. And I don't necessarily mean distance. I mean a kind of like a change in volatility. So it's quiet at the start, you get the move, and then it quietens down again. Most days you'll find that to some degree. On a bank holiday, that's missing, and that's because that weight has been removed. So you see here that what I mean by that's not really a main move of the day, because the rotation back down, it didn't even extend out of the intraday low. So it's a market that just goes nowhere. So even if you were on a short position here, I mean, this is a 1 hour time frame. So if you were to take that into a 15 or a 5, you'd be looking to get to those lows and then break those lows to maybe move lower. You don't get it. You get that rotation back in. So you don't get that weight. It's really subtle, but once you start to think about it, you'll start to recognize it. Yeah. What about the next one? This is the May Day bank holiday. Let me just go over there. You can see here again. Look, an inside day, but this one, because our price action is completely contained within the previous day. But for this one, this is completely different, because this has got virtually no main move of the day. I mean, you got a little bit of an uptick there on the Asian Open as Asia opens. It's a relatively subdued day. That's probably going to be about 20-30 pips as well, 24 pips. So there's nothing in it price action wise really, and the actual move of the day, the main move of the day, again is missing. You get some sort of move back up to the intraday highs, which doesn't stick. We don't even test the high properly, and then we just fall back in, and the market drifts. So you know what I was saying about these big commercial banks putting these large transactions through? You can see they're not there. But you can also see, and this is the advantage of thinking like this, you can also see the overall fundamental lean on that currency pair, because you can see the euro getting weaker and the pound getting stronger. So it's like there's a hidden force that's been removed, and you can see the market is just drifting. Yeah. So you can see, so although this is not necessarily something that you want to be getting involved in, you can still use the information to your advantage. All about how you see it, all about how you start to think about it. So hopefully that's a really, really good example of the kinds of qualities. Now, there'll be people watching and say, yeah, but, and okay, I get it, that's fine. You'll always find exceptions, but as a trader, you've got to have a framework to work with, and if you don't have a framework, then you've got nothing. Yeah, so you have to have something that you can hang your hat on. You can deviate from it, of course, but you've got to have something that you can hang your hat on. And this is for me, from my experience of trading for such a long time, bank holidays now are something that I would want to avoid. So because I've lost so much money from trying to compensate for the bank holiday and not really understanding why the market is not behaving the way I want it to trade. So what should you do? Okay, well, I mean, obviously we're a prop company and the industry will always want to promote people to trade. That's how the industry works, yeah? But my own opinion is, from my point of view, from when I've been trading, I would say that trading bank holidays is not a good thing. It's not a very effective way of trying to optimize your strategy and just take the next trade. I would avoid them completely because of all of the reasons that we've talked about. Because it's only one day. And always remember that the market will be back 24 hours. And Tuesday, everything's back to normal, yeah? Or whatever, how you want to define your bank holiday. So you don't have to wait very long, and you just need to sit it out. And you will save yourself a huge amount of pain just by doing that. So I would say that bank holidays are something that I personally would avoid trading. I wouldn't even go near it. Even if you do get a fat-fingered, thin market trade that gives you a volatile move, over the course of years, I'd say it's not worth it. So what should you do? Okay, well, I mean, this is pretty obvious. This is not difficult for most people to understand. There's no shortage of things that you can be doing. If you're setting up your trading business in the correct way and you're working your accounts in the right way, there's tons of admin that you should be getting involved in. The way that you should be logging your trades, the way that you should be setting up your trading accounts, your platforms, all that kind of stuff. All that admin can take place on a bank holiday. You can catch up with various people on forums and that kind of thing, or do that bit of research that you were thinking of doing, or any study, any books that you have purchased or anything like that, any YouTube courses or videos or stuff that you need to get through. All of that stuff. Bank holiday is the time to be doing that. Trust me, it's a far better use of your time than trying to grind something out of the market. Or alternatively, get involved in journaling. Journaling is something that you should be doing as well as a trader. But you can be doing that too as well on the various platforms, in the software, however you are doing your journaling. All of that stuff. Even clean your room, clean your desk space. There's nothing better, nothing more satisfying than feeling that you're tuned and ready for the markets, than having a clean desk space, cleaning up your computer and wiping your keyboard down and all that stuff, getting your hoover the room and stuff, wipe everything down. You'd be surprised what it gives you from a mental uplift by coming in on the Tuesday and sitting there and saying, right, I'm fresh and I'm ready to tackle the markets. It's amazing. Do that on a bank holiday. Trust me. So it's very, very good stuff. So that's a good look at bank holidays and the reasons why they are like they are and how you should potentially tackle them. I hope that is useful, at least to some people anyway. Okay, let's move on and let's talk about inflation data. It's a little bit light on the calendar next week. There's not a huge amount. We've got GDP data, I think, in the US midweek, I think. And then on the Friday, we've got inflation data. We've got the PCE reading. So I thought, but even though I don't think it's going to be a huge game changer in the markets, but we could talk a little bit about PCE inflation and you can expand your knowledge because it is a very, very important measure of inflation. And if you don't understand what it is, you really should understand what it is and why it is so important. Now, obviously, inflation is too much money chasing too few goods and services, and obviously that starts to push prices up as people spend more, and then people make more money, and so you get into that feedback loop of prices going higher, and then people needing to get more wages to pay for that. You get the idea. So this is not an economics class on what inflation is. But the measurement of inflation is done in different ways by different entities and followed by different countries and different central banks and governments and stuff. And they all do look at it slightly differently. The main one, the historic one, is called CPI, which is the Consumer Price Index. But there's also another one, and that is called the PCE inflation data. And that stands for the Personal Consumer Expenditure Deflator. That's a really fancy, complicated title, but it's not very difficult to understand. Now, the reason why this is so important, and this is a subject that's very, very close to my heart, is because this is the favored measure of inflation followed by the Federal Reserve. So when we're looking at the Federal Reserve changing interest rates, changing monetary policy, understanding that PCE is the inflation data that they are hanging their hat on, that's really, really useful to know. And there's a link it's either in the description somewhere, and that link is for something called the Boskin Commission. And this basically sort of like picked apart how inflation data is measured, what the problems are, and tried to solve it. And this is essentially where PCE inflation came from. Now, the Federal Reserve, they used CPI. The Bank of England used CPI, but the Federal Reserve stopped using CPI in the year 2000, and since then they have focused primarily on PCE inflation. So what was the study actually doing? Well, it was asking a very, very simple question. How well does CPI itself actually measure the cost of living, those price hikes? And if that is a good thing, then how useful is that reading over time? And it found that there were some very core inherent problems with the reading of inflation through the lens of CPI alone. Now, without going into too much detail, what is CPI and how does it work? Well, the reason I've got this square on the screen here is to show you that CPI reading is essentially you take the price of lots of different things. So, I don't know, price of a loaf of bread, price of a pint of milk, price of a gallon of petrol or gasoline or a computer or whatever it is. Yeah, you take all the price of that stuff and you add it all up, you average it, and you put weighting in. Some things are more important than others, and you comprise that into a sort of like an average box like that, so you can see the different, that just represents the different things that make up that reading, and that's it. That is the entire reading of CPI. So that's what we would call a fixed basket. Yeah, it's a basket of stuff, and we know how much it all is, and there you go. That gives us, we know what our reading is. As that is going to change, that's going to go up and down as prices go up and prices go down, and that's our CPI. But there's a key problem with this, and that is that it's essentially only updated every single year. So we get that measurement of what is going to make up our CPI reading, what those prices are going to be, and we leave it there for an entire year, and it stays there. And there's a big problem with that. And the problem is that whilst the CPI reading doesn't change, the consumer moves very, very quickly. And if you think about the way that households run, families, wives and husbands, and you as an individual, the consumer is very, very fast to react. The consumer is very sensitive to an increase on their mortgage or a change on their credit card interest that they've got to pay or something like that, or they become unemployed or they get a pay rise. The point is that they'll adjust the way that they live their lives very, very quickly. And the idea is if the consumer moves very quickly, that affects the inflation in the system. And so therefore, CPI is very, very slow because it's only updated every year. So as we're going through the year and we're looking at the CPI, there's a detachment. The consumer can be reactive much faster than the CPI can actually catch up. So therefore, what the Boskin report found is that, there's a bit of a discrepancy between what really is inflation like versus what the CPI is actually saying it's like. And there's a bit of a disconnect there. So this is where PCE came from, because what happens in PCE inflation, it represents the same sort of thing, a basket of goods and services, but it's much faster to react. It's changed every single month. And as it changes, the weighting and the pricing changes, and so the PCE reading changes as well. And the theory is that as that happens, as the consumer starts to change their behavior in the economy, then the PCE reflects that faster. So we have a much more accurate reading of inflation by following PCE inflation than we do just by following CPI alone. And that's why the Federal Reserve like it. And I like it too. I think it's the right way to do it because it's faster, it's more accurate, it's reactive, and that is what you want. So this is why PCE inflation data, which we will get next Friday, this is why it matters so much, because it's very, very accurate. It's the most accurate reading of inflation that we have. And also as well, the Federal Reserve completely and utterly rely on that. That's their favored measure of inflation. So I know it's quite, and this is why I love economics and fundamentals, and it makes your understanding of markets so much richer when you really get into this stuff. But this is why it's so very, very important to understand. So next Friday, if you've never seen this before, pay attention. There's loads and loads of places you can see this stuff online. This is the chart from Trading Economics, which is where I look for my data. We've got it, we'll have it on the dashboard, on the client dashboard as well, or Forex Factory is another big one that people look at. Look at those PCE readings and follow the chart. You'll see, I think we've only got the early forecasts out. I think it's 0.2% we're expecting on the forecast for Friday's reading. But the point is that now you understand what is happening. So you can see that, look at that right. I mean, we fell off last month, but you can see before then, that stepping process in PCE inflation. And you can see now that this is an inflation reading that is more accurate because it's morphing with the economy and the way that the consumer changes their behavior. Really fascinating stuff. So yeah, that is PC inflation next Friday. Pay attention to it, and hopefully that fills in some knowledge gaps for one or two people as well. Okay, let's move on and let's do a little workshop now on setting realistic goals. Again, this is super important. You know, you get access to markets with FTUK through the purchase of a prop account, and the purchase of a prop account should be your final decision once you understand what you're doing and you've nailed your strategy and you are now ready to be involved in the market and you're looking to make a return and you're looking to become a professional trader. That is the point that you should be getting involved in the prop account, which means that you should understand what you're doing, but you will be staggered at how many people they just start, they purchase an account, they come in with unrealistic expectations, and they've not done any work whatsoever on the kinds of stuff that are really going to make a difference. And that's why understanding, setting your goals, setting your stall out before you actually purchase an account is a really good idea. So this is a little workshop on that. I've split it into 4 sections. Why realistic goals matters, why having that in prop is very important. Also common unrealistic goals, which are going to be something that most people will recognize. What then a realistic goal actually looks like, and then how you should connect your goals with your prop account, because the prop account restricts you. It's not a resale brokerage account. It's not a free-for-all. You have to follow the rules. So how you take that structure and how your goals should be shaped around that prop account. So it's very, very important stuff. Now, most people will recognize, that people will come into markets expecting to make a huge amount of money, and they'll fall for the marketing that you see online all the time, with people driving around in flash Lamborghinis and all that sort of stuff. Let's be realistic. We have some very, very successful traders, and they're very good at understanding strategy, managing risk, and then moving through the market day to day and taking regular profits. We have some very, very skilled people at doing that. We also have a lot of people that come in and think that they're going to get rich overnight, and the prop industry is going to have that. But being realistic is not necessarily about trying to double your account overnight. I mean, come on. I mean, it's not an easy thing to do. Could you do it? Yes, you can, but then think of the risk that you're actually taking to actually get there. So being realistic is where you get your sustainability from. The challenges that we have, the challenges that you'll be purchasing, they're always essentially going to make you manage your risk more consistently. I said this in last week's stream. This is one of the good things about the prop industry, but always remember that you cannot control the market, but you can control your approach. And this is the gateway into setting realistic goals. So let's look at some common unrealistic goals. Okay, I've written a few down here. I need to hit 10% this week to pass phase 1. So our profit targets on our challenge accounts and stuff, our scaling targets on the instant funding, it's always 10%. I'm going to do that in a week, and off we go. And we have a minimum on, I think we still have a minimum on 1 or 2. But the point is that people think that they're doing that in a week is a good idea. Well, if you bear in mind that a hedge fund would be happy with a 20% return over a 12-month period, 10% in 1 week, that's pretty aggressive. Yeah, so it's not necessarily, people do it, but it is very, very aggressive. Or they may say that they'll be looking to make I want to make $1,000 a day. I'll get a 100K account, I'll make $1,000 a day, and then I'll be quids in. Okay, well that in itself, that's quite, it's not impossible, obviously, but it's quite difficult to do day in, day out, and who's not done this one before? I'm never going to lose a trade again. I want to be right all the time. I've got to be honest with you. I've been doing trading a long, long time, and even for myself, I would have, if I'm really honest with you, I would say that I've never clicked the button to buy or sell in the market thinking that I was wrong. Who does? All human beings think that the trade that they're doing right now is going to work. Otherwise, you wouldn't trade, would you? Yeah. So we all have that inherently built into our minds. So most people will go through a phase where they think, okay, I don't want to be a losing trader at all. If I just don't do that, then I will be very successful. All what they'll do is they'll think, okay, well, this is my profession. I'm going to be a full-time trader, and I want to do it in 30 days, and then I will be a professional. So these are kinds of things that are completely unrealistic. What's important to remember is that these are not necessarily goals. What people are bringing to the table there is they're bringing their hopes, their dreams, or the outcome that they are looking for from the purchase of the account. And that in itself is not a goal. Realistic goals therefore should therefore be behavior-based, not based around chasing performance in some capacity. And we'll expand that a little bit so that you sort of understand a little bit more about it. What is realistic? How do we set realistic goals? Well, we can do them in different ways. The first thing that you can do is you can set goals that are basically based on time. So what do you want to achieve today? What do you want to achieve this week? And these are all kind of things that are based around the way you behave as a trader rather than the outcome of the trading itself. So you can say, okay, well, one of the things that I want to change, I'm too used to clicking the button. Maybe I'm going to force myself, I'm going to take 2 trades a day. If you think about the way that a daily candle is constructed, you should have a high and you should have a low. There are essentially 2 core trades that you could take a day. You could turn that into something that is realistic, and therefore you're not at the roulette wheel the entire time with the zero going against you on every single spin. You step back and the game gets a little bit easier. Only doing 2 trades a day is a good way of defining that. Or maybe you could say, I'm going to follow my plan 100% this week if that's something that you have problems sticking with consistently. You could even say that you're going to limit your losses to a 1R maximum per trade. I mean, everyone should be using a stop loss, yeah? So that's not, and there's no shortage of calculation tools to help you understand how much you're risking per trade. So that is something that you should do. It took me a long time to get to a stage where I said, I'm going to put a stop loss on every single trade, because you don't want to be wrong and you want to give the market more room, yeah? So it's not an easy thing to do. These are goals that are very, very realistic and they're behavior based. Or you could say that you're going to review your trades every week, every Sunday. I used to do mine on Saturday morning, so that sort of stuff is very, very useful goal setting kind of stuff to do. What about the actual challenges and the actual funded goals themselves? Well, you could say that you're going to stay within the limits of the prop account and you're going to do that for 30 days. So if you're someone that you've bought several accounts and you can burn through them very, very quickly, obviously to a certain degree, that is not a healthy way to be using a prop firm, obviously, but people will lose accounts quite quickly. You can say, well, if you're struggling with that, but you want some skin in the game, keep the cost low, go for the cheaper accounts, that's fine, for the lower account sizes, because they're not going to cost as much. But you can say, okay, I'm actually not going to bother about hitting the profit target, but I don't want to blow up for a long time. I don't want to hit the drawdown level. I don't want to stay with this account as long as I can. That's a very, very noble and very realistic goal, and you'll benefit as a trader just from that. And what you're doing then is you're removing the necessity for this to be everything, this to be your massive profitable opportunity, and you're working as a trader. You're developing as a trader. I cannot emphasize how strong that is. It's a really good goal to do. So just by saying, I want to sit with the account, you're almost, that's almost a W in itself, because you're doing something that a lot of people cannot do. Maybe that you could say that you're only going to focus on positive risk reward setups on every single day. So if you're not getting your 2-to-1 or your 3-to-1, you're not going to be taking that trade. Or maybe you're going to journal every trade. I'm going to get into the discipline of journaling every single trade day to day. We've got fantastic software. You've even got a built-in tagging and journaling functionality thing in DX Trades if you want to use the DX platform, which is great. It's cool, works really well, and it's just all there for you in the platform. You just type it in and away you go. Or maybe you could then say, I'm going to aim for a 1 to 3% growth per week per maximum. Yeah, these are all very realistic things that you can do. And they're achievable as well, and that's the thing. You can achieve everything on that slide there, no question. And then what we could talk about is how we then align goals to the way that the account actually operates, so that you align your goals with the account parameters and you don't go against them. This is important because they are prop accounts. So instead of saying I need to pass ASAP, which a lot of people do, you could say, okay, I need to avoid breaching rules for 30 days and I want to execute clean trades the entire time. Reframe it like that, and all of a sudden it becomes something that you can achieve. And if you can achieve that, you can do it. If you can do it once, you can do it twice. If you can do it twice, it can become a positive habit, and then away you go. What about progress versus outcome? So you could say that an outcome goal could potentially be that you want to get funded in 14 days. And that in itself is pretty aggressive. The way that you would get there is by breaking down the goal and setting it into simple chunks that you can actually achieve. And you could say, well, the progress to getting that outcome would be, I'm going to execute 10 clean trades this week. I'm going to avoid my revenge trading behavior, or I'm going to stop trading when I feel that's starting to happen. And maybe I'm going to check the economic calendar so I avoid news trading, because I always get a bit confused and I feel like I'm gambling. All of that stuff is really, really good to do as well. And what that does when you start to work and think like that is you create a sense of accountability for yourself. And once you do that, you start to remove feelings of anxiety. And that in itself helps your trading mindset. So important. Really, really important. What about a checklist? I think we're going to build this into a social post online because it's really useful to do. You can build a checklist which you can have printed out, stick it by your desk, and then you know that you're accountable and you're sticking to the goals that work within the prop account that you're working with. Number one, read the rules. I mean, the amount of people that come through the door and they get angry and you say to them, well, did you read the rules? Oh, no. Read the rules on the account. They're all slightly different. They're blended so that you can, if you don't want to work with the consistency scoring, you don't have to, but you have to do it on a 1-step or a 2-step. If you do, if you want to work with a static, you can do that. If you want to work with a trailing drawing, you can do that. They're all different, but read them. Understand how the account protector works. All of this stuff is important. Do you know what those rules are? And you've got no shortage of understanding on there because you've got the FAQs. There's a lot of detail on there. The stuff on the website, there's nothing hidden at FTUK. Everything is transparent, and people will come along and they'll say, well, this is a hidden rule, this is hidden. No, it's not. It's just that we can't put absolutely everything on one page on the website. You can't do it. It just doesn't work. Otherwise, no one would trade with us whatsoever. It's too overwhelming. But there's nothing hidden. And what you can always do as well, we have great support customer service. You can always come on the support services, the CRISP, speak to Liam, or the support email, or go to Discord and speak to Reza. And we've got huge amounts of knowledge and skill and expertise and experience there that you can tap into. So make sure you know the rules. Are you measuring your execution, or are you measuring just your P&L? That's a really good question. Don't just measure performance, measure what you're doing to make that performance as well. That's a very, very, very big thing. And you will liberate yourself as a trader, and you'll really start to develop once you start to look at your execution, not just how much money did I make this week. Really, really strong one. Have I defined my weekly trading process, not just a profit target? Okay, well, this just taps into everything that we've been talking about for the last 20 minutes about this. What about can I stick to my plan even after 3 losses? I mean, it's dead easy, isn't it, to say 3 losses and take a break. I did a thing about parabolics, didn't I, a few weeks ago, which was on one of the live streams. I think we put it on Instagram as well, where I said, okay, well, I was training my ability to be flexible in the market using a parabolic. I just said I had a 2-trade rule. 2 trades is wrong, go in the other direction. Yeah, that will help you develop as a trader. So these are the kinds of things that are very, very useful when you're working with a prop account. Finally, this is the last bit of this, and I know we've got a lot of detail in there, but you can go back and rewatch it, and it's hopefully there's some you'll definitely get some use out of it. Which of these would you prefer to be? Think about trader A, somebody who wants to flip a 50k challenge account very quickly, and they're going to do that, and they're just going to use the leverage and the firepower, gamble into non-farm payrolls, bang, there you go. But they break all of the rules in 3 days. Do you want to be that guy, or do you want to be trader B? Trader B is someone who sets a daily goal of maybe just 2 trades a day. They accept, they've measured their risk, they accept a 1R loss, and they review their trades every single weekend. And then after 28 days of doing that, they actually become funded. Which one of those would you rather be? Not difficult, is it? But you'd be surprised. You'd be surprised. So hopefully there's something in there to make you think. Yeah, there's a lot of detail in all of that, but it's good to have to get into the long weeds with these things sometimes. Okay, let's now wrap it up with an offer for the weekend. So if you're looking to get involved in your prop account and you want to get really sort of dig in next week, even though it is a little bit quiet, now is the opportunity to do that. We've got a split offer this week. The discounts are completely different for instant or for challenge accounts. If you want to go down the funded route of purchasing an instant funded account, you get a 30% discount, and we're also giving you the profit booster add-on for free in there as well. Now, bear in mind that this is not increased profit split. I cannot emphasize that enough. What it is if you make a $200 profit, we give you, I think it's, I forget the actual percentage, but you get an extra percentage on that profit. It's not an increased profit split, but it is useful to do because it does add to your winning edge, particularly on the bigger accounts. So it's worth having. Plus, you get a 30% discount. On the challenge accounts, that's on the 1 and the 2 step. We've got a great offer. It's News 35. That is the offer, and that's a 35% discount. And you get the news trading add-on thrown in there for free. So that if you do want to work with the PCE or the GDP data next week, then you have the opportunity to do so, and you can really capitalize on that. Goodness me, that was a lot. That is an awful lot for one session. A lot of detail in there. So quieter week next week. But, use it, enjoy it while it's a little bit quieter, because I promise you things will always be getting busier, because that is the nature of markets. Thank you very much for watching. Have a great week in the markets ahead, and we'll see you all next Friday.